Yes, yes. Love the intro. Love the countdown music. What's up, everybody? Spencer Israel joining me today. Patrick Dunawilla, editor of the Chart Report. Welcome to CRL, Chart Request Live, the show where you provide the tickers, we provide the analysis. Pat, what's up, man?
Hey, how you doing?
Doing fantastic. It's Thursday, but it feels like Tuesday, so it's pretty cool.
Yeah, it's
Yeah.
been a weird week for sure, with the holiday, and it just seemed like, what was it? We had Monday, right? And then the holiday.
Yeah,
And
we worked Monday, but we had no shows on Monday, so it was like a weird pseudo off day.
yeah.
Yeah, and then here we are now. Okay. Um, as I've said previously in previous shows, if you want us to talk about your ticker, drop it in the chat. But if you know you have something on your mind and you want us to talk about it, or you want us to like give priority to you, the best way is to email us questions at stockmarketmedia.com. We already had a few people submit questions ahead of time for this show. So let's start with those questions. I wrote them all down. Eric is asking, what do we think about Goldman Sachs over the next 1 to 3 months? We were promised a banking crisis and it isn't happening, and the IPO market is back open. I would say maybe it's back open. Isn't this a logical place to catch rotation? Let's get that GS chart up on the screen. Pat, what say you?
You know, it's not my favorite chart out there. It's a little messy. We could throw a moving average on it just to kind of smooth out the trend a little here. This is a weekly chart. On weekly charts, I like to use a 40-week moving average, which is, roughly equal to the 200-day moving average. So we'll see what that looks like on here.
Why?
Just to give you an idea of kind of the direction of the trend right now, and it's just kind of flat. So, it's not the worst chart, primary uptrend, but it's got a little bit of this head and shoulders type action here. You can kind of see the right shoulder here, head here, left shoulder there. So, this is a really important level here. This, like, call it 270-ish. The lows from last year, the highs from 2018. Could we test it again? Probably. Something like this, I think, is worth looking at on a relative basis too. So we could put it against the XLF, which is, of course, the financial sector ETF. And, just rejection after rejection at that same resistance level there. Here, we'll put it with ratios. I like to put them in a line chart, but not the best here. JP Morgan, we can look at that one real quick. That one was pretty resilient through this whole thing. And JP Morgan's a really important one. Of course, Goldman Sachs is too, but this one is, I think, a really interesting one to watch here because we had a breakout of that really important level earlier this week. And, we're kind of back in that level now. So, definitely want to keep an eye on this one in the next few days.
Maybe we should just acknowledge first what is just happening out there today. I'm not always super interested in like day-to-day gyrations of the market, but today is just a sea of red. The only green on my screen is oil futures by 3 cents and Microsoft.
Although we have come back decently off the lows, right? I mean, we can pull up a chart of S&P here. We filled that gap. A lot of talk of this island reversal pattern here on not just the chart of the S&P 500, but a lot of other charts are showing that kind of, we gapped up on Friday and then now we're gapping back below. Was it just to fill the gap, or is it the start of kind of a deeper decline, a deeper pullback? That kind of has yet to be determined, but I will say it's kind of encouraging to see some buying coming in intraday. When we're looking at the open this morning on the morning show, JC said, it's all about where it closes. So we got about 2-3 hours left. So we'll see, if we can continue seeing some buyers step in like that, I think that'd be really bullish. But We'll see. Yeah, we'll see how this week ends. But I have a feeling a lot of people got their stops run today. A
Maybe.
lot of people are just starting to trust this market again and starting to take positions like they were 2 years ago.
It's
And
always how it works, isn't it?
right, right.
Yeah, it's always
Just
how it
when
works.
everyone's ready to embrace it, it's usually
Uh-huh.
too
All
late.
right. This is from Scott. He's looking about for Noble Corp, ticker NE, oil and gas play, relatively recent IPO. I think they IPO'd 2 years ago. They IPO'd. Um,
Yeah, I'm actually very familiar with this one. I was just writing about it yesterday in our heat check,
yes, you
which
were.
is yeah, it's a scan we do at the chart report for our private access members, which looks for trending tickers and Noble Energy. This one, who brought it up?
Scott.
Scott, great eye. I like this one. It's been in an uptrend, like you guys mentioned. It IPO'd not too long ago, but it's been in an uptrend throughout. Since it's been public, and it's kind of approaching those all-time highs here. If it's above 45.50, I think you want to buy that breakout. And yeah, you got a Fibonacci level around 53 here. So that would be a decent place to take profits, kind of reevaluate the trade. But this one, and especially being in the energy sector, which hasn't really done much the
Mm.
past year, even seeing this thing kind of working its way back up towards the former highs, which, it made an all-time high in March, and it's just been basing for the past 4 months. So I like this one. Good eye, Scott.
And then we have, this is from Jeff. Please share your thoughts on Farfetch. Ticker is FTCH. I know that this is an e-commerce company, but that's literally all I know about them. Here's what Jeff said. I'm watching the recent break / retest of the downtrend on the daily chart. It's between the 20 and 50 SMA on the weekly. It also has some unusual options activity. So FTCH is the ticker. There it is. What do we have?
Yeah, I mean, that is definitely a downtrend for sure. I see what he's talking about here. It's kind of battling with its 40-week moving average, which is, again, very similar to its 200-day moving average. But I think with this one, what you want to be watching this level right here, call it $7. So you have this nice bullish momentum divergence. That's encouraging if you're bullish. Let me draw that in here. But you see pretty much all year, at least on a weekly chart, and we'll go into the daily after this, but momentum's diverging from price. Price is making new lows. RSI is not and hasn't gotten oversold in quite a while. But I think you want to see it kind of prove it and close above those former lows there. That to me would resemble a fail breakdown, and that would get me a lot more bullish. But you said this one's a payment processor?
It's an e-commerce company, but I don't. That's literally all that I know. I don't know anything else. Yeah, I know they have a funny name. Okay, let's go to the chat here. We got to talk about this GENI, Genius Brands, GENI. There's about, I don't know, maybe 24, maybe 36 stocks that I would call just viral stocks. They have a large retail ownership, and when these stocks have news, like GENI has news today, it tends to go a little viral on social media, in the market. GENI is up 21% today. It's Genius Sports. The headline is that they extended their deal with the NFL. They are the official data and betting distribution partner of the NFL. It's a data play. They extended that through the end of the 2028 season. So that's the headline this morning. That's why the stock is up the way it is today. But this is just a viral retail darling stock. I'm not really sure why, but it is.
Yeah, I haven't heard of this one, but obviously getting a nice pop today, up 21%.
Yeah.
And breaking out of this kind of resistance level that I drew in here, call it around 630. I think that's encouraging. You can see it's tried for the last year and a half pretty much to crack that, but we're finally over it. I think in terms of upside, next major resistance level is around 1350 here. Yeah, it could go. I could see it. I mean, it's not the cleanest looking chart, but it could definitely go.
Wavy says that Danny Moses has been on this for a while. He's one of the guys from The Big Short. If you don't know him, actually interviewed him a couple years ago at a at a cannabis conference.
No kidding. Is he bullish?
Of all play, yeah, that's why he was there. You
Oh,
don't
okay.
go. You don't go to a cannabis conference if you don't like cannabis. Okay, back to the chat. Let's do. I like this one from Eric Gonzalez. JD is China still untouchable? I have looked at Chinese stocks. I just kind of tune them out of my brain because I got left with such a bad taste in my mouth from a couple of years ago that I don't know.
Yeah, no,
I don't look at it, but yeah.
I think what's interesting about this group of stocks, whether we're looking at JD or Alibaba or any of the big Chinese internet companies or some of the components in like KWeb, is they were leading and they kind of were the first to roll over. And so I think maybe you could look for them, to perk up as a sign of risk appetite returning, but they just haven't done that yet. It seems like every time they've had a start this year, they've kind of just dropped the ball and fumbled. But really not much to like about this one here, still hovering near multi-year lows and below a lot of moving averages here. So I don't think you want to be a hero with this one. I would, again, wait for it to prove to you that it has momentum and that things are returning. It just seems heavy. Every time it tries to rally, it just comes down. So yeah, I wouldn't pick this one.
Is there a Chinese name you do like, or just not really?
Not at the moment. Yeah. I can't really, it's been a weak area, so I tend to just avoid weak areas.
I tend to avoid markets where the government is liable to just drop the hammer on the entire industry, as happened to this industry a couple years ago. Okay, a few people here asking about CP, Canadian Pacific.
Oh, so yeah.
Let's take a look at that right now.
So I probably have my markings on it already. Yeah.
Nice.
So this was one we had in the buzz quite a few weeks ago.
Yep.
But it never triggered for us. You can see it almost made it out, but never triggered an entry. Just been range bound for literally years. The line in the sand is definitely that 83, 84 level. If it can finally get above there, you got a shot of a move to like 93, 94, which, that's about, well, decent bit of upside there. It continues to be in a nice uptrend. It's been in an uptrend for decades, but it just hasn't been able to really break out yet. So this one is still in wait and see mode. And I'll tell you, I probably made these markings at least 3 months ago. So
okay,
that just goes to show you that this thing it's been looking good. Like I don't want to say it's a bad looking chart. It's a nice looking setup, but just hasn't broken out yet.
This is an interesting one. This is a new one for me from Wing of Tech, BSY, Bentley Systems. It's a software company, but it is a software company in like the construction and in an industrial space. Those are their customers. So in a sense, it's like sort of an industrial stock.
Yeah, I think that's really interesting. I've been seeing a lot of those type names where they're like industrial, but they also have a little bit of tech in them too. And kind of fits with two themes that are working there, which is tech and industrials right now. So this is an interesting one for sure. I think you want to see it hold this little shelf of former resistance, now support. If it's coming in a little bit here with the rest of the market, I think you want to see it hold above that 48.50 level. If it does that, I think we could continue on to like 60. That'd be kind of the next stop, but definitely behaving well. You can see that it's probably in an industry that is working right now. I wonder how big this one is. Do you know?
Let me check.
Guess we can look it up
My
here.
my computer is being just a touch
Uh,
on the slow side today, so you might beat me.
Yeah, it's 15 billion. That's not peanuts. That's
No, it's not.
yeah,
Okay, what about booking.com? Or booking, sorry,
sure.
booking holdings, BKNG, the stock
Sure.
that they refuse to split for some reason. It's like $3,000 or something. I have no idea. I just know it's it's high priced
Yeah.
and
See, I
expensive
still
from a PE standpoint.
I still like calling this one Priceline.
Yeah.
I'm not sure when they changed the name of it, but this one used to be like one of the FANG stocks. I mean, it was kind of grouped in with those. Maybe not at the time when they came up with that moniker, but was that Jim Cramer who came up with FANG? Yeah.
There was two of them. It was Kramer, and then there was the other guy. What's the other guy's name? He was at the street with Kramer. The options guy. I'm not gonna remember his name. I don't know.
Okay.
Anyway,
So this one is a little bit choppy. Not the cleanest level. It's pretty big. As Spencer mentioned, it's an expensive stock. So that's quite a big risk level there. I kind of use this candle to draw that, but yeah, I mean it's not terrible. Seeing it kind of consolidate here for weeks, months, uh, right near the former highs. I think that's constructive. The path of least resistance is probably higher from here. As far as targets go, again, kind of a choppy looking chart, but I like to use Fibonacci for price targets when something's at all-time highs like this because there's no price memory. So that's when it's usually a good time to bust out the fib tool and look for some extensions. So, 3,700, not out of the question. It could do it.
all right. Okay. Nipun, I hope I'm saying that right, is asking for the Nifty 50. So let's just look at INDI, which is the iShares India, basically Nifty 50 ETF.
Yeah, so I still have my 200-week moving average on here. I think it's kind of interesting how it's kind of held that at some pretty key moments. Not terrible. There are some ugly fail breakouts out there as far as international indices, mostly in Europe. If you look at like the FTSE and stuff, but this is decent.
Okay.
I like that you're holding above this, shelf of former resistance here, the pre-COVID highs. We retested it earlier this year and you're rebounding nicely. You want to see it get above 45 here, 46, call it. That to me would be a lot more convincing, but definitely not a bad chart. I'd like to see the moving average kind of start to curl up a little bit more too, but that's it's not an awful chart.
Jason Walcott asking for Magna International MGA. This is a $16 billion. What are they? I don't even know what this company does. I have no idea. This is like a construction play.
Yeah, it looks like
Yeah.
auto parts,
Yeah.
manufacturing. Magna International is a mobility technology company which engages in the design engineering of. Okay. Huh. Well, it looks like I already have a level drawn in here. You clearly, I want to see it above that level. Not my favorite looking industrial type name. I'm not sure that it is in the industrial sector, but I think you want to see it reclaim that 68 level. If it does, very constructive. That level was the 2018 high, so not that great seeing it below.
Okay, here's one that I have not heard mentioned in quite some time. This was a darling stock of the post-COVID boom. Nano Dimension. Do you remember this one? NNDM. Martin's asked about this one in the chat. This thing was how high did it get? It got to, well, I think they may have done a reverse split. I don't remember it actually being $100. But no, post-COVID it went from I think split adjusted now because they definitely did a reverse split, but it was like 50 cents now to like $20 or something after COVID. Total retail darling. And so let's zoom in. So the point is zoom in, I think, because they're
Sure.
asking about the recent pop.
Oh, okay. Sure.
So that's what he's asking about, but I haven't heard about this one in over a year.
Yeah, I mean, quite the pop recently, but don't love that that pop wasn't able to get above those former highs, that 320 level. If this thing was going to reverse its longer term downtrend, I think you would have wanted to see it extend above there. Now it still could. It's totally possible. I do like that it's, holding this. This isn't the type of name I like, just because it is a little bit cheaper. And it's in a clear downtrend. Could you lean on this level? Yeah. I bet if we threw RSI in here. Okay, yeah, that's not bad. Seeing it kind of not hit oversold like this, I think that's encouraging. But I'd like it a lot more if it cleared this like 320, 325 level. It just hasn't really started making a convincing reversal yet. I mean, that's a pretty nasty downtrend.
Yeah, no kidding. Hey, do you look at any leverage or inverse fixed income ETFs? We're asking a question about TBX, which is the short 7 to 10 year treasury ETF.
Oh wow. Yeah.
So TBX is breaking out, which means obviously it's a bet against 7 to 10 year treasuries. So
yeah, so I mean, this one looks just like a chart of the 10-year yield. It definitely is shaping up for a move higher. It looks like I would. So I'll just say real quick, in relation to leveraged ETFs, anytime you're thinking about trading a leveraged ETF, you usually want to do your chart analysis on whatever the underlying is. So if we're looking at gold miners, we want to be looking at GDX, even if we're going to trade JNUG or something like that. So for staying on TBX, if it's above 29, let's see where our Fibonacci tool gets us. 31. And then we'll move over to the 10-year yield. Yes, he looks very similar to that. Yeah, I mean, this thing looks like it's ready to resolve higher, just been consolidating for almost a year, basically since the market bottomed. And you're starting to see a lot of talk about, yields. All of a sudden, yields are back at multi-month highs. And are we going to see that pressure on growth in tech stocks again, like we did last year? So this is definitely an important one to watch, whether you're trading the leveraged ETF or just thinking about it from kind of more of a macro perspective.
Well, Wavy likes it. I think if his messages
shout out to Wavy,
any indication. Dear Lord, holy crap. Okay, let's do end phase. Solar is getting just sloshed today. TAN is actually leading, or the biggest loser on my screen right now. The solar ETF end phase is one of the larger components of TAN, I believe, if memory serves. So it's down today as well, about 2%. Solar as a whole is down about 4%. But what does the end phase chart say to you?
Yeah, I mean, it hasn't really seen a rebound like some other areas of the market have. Still in a nice primary uptrend. I'm curious to see how much it fell last year. Oops. Spence, one thing I love about TradingView is they have all these custom indicators that other people have built that you can just add right to your platform. This one is a drawdown tool that I have. It's really helpful just to see, in scenarios like this where you want to kind of see what the last kind of drawdowns looked like. So looks like at its worst this year, it was down about 51%. Wow. Let's take a closer look in the daily chart here. Yeah, I think you want to see it hold this 130-ish, 125 level. I think it could make another low before you do ultimately catch support again. And then obviously to the upside, you want that 325-ish, those former highs. I would want to see the entire sector acting a little bit better. As you mentioned, this
Yeah.
is a big component, so maybe the move for solar stocks starts with something like an end phase. Um, but looking at that Fibonacci level there, you want to see it continue to hold. I think it's good that it's continuing to hold above it, but still in need of some further repair.
Okay, that I think is a good place to. Oh, let's do one more. Let's do Carvana. I haven't looked at Carvana all day, so I just brought it up, and no surprise, it's down. On a day where the market is down, I would expect Carvana to be down more, which it is. Though I have to admit, I only 6.5%. I would have guessed it would be down a little more than that today, but nonetheless, here we are, still hanging out in the mid 20s.
Only 6%. I
Yeah,
mean, this stock, it blows my mind. This stock was down almost 99% last. Oh yeah, pretty
yeah.
98.99, 99%.
Yep.
That is wild to me, especially when you consider how loved it was coming out of COVID. I mean, just a total round trip for this thing. And now, this year, I think, what are we up? Like, we're up big,
It's crazy. The stock was $3 in December.
500%. Yeah. So I like that it's kind of holding above both these lows and this high from February here. I think that's the level you want to lean on in the near term. So if you're in this thing, I think if it fell below this 1950 level, so between 20 and 1950, that would get me out of this one. If we look at RSI here, I don't love that it's diverging a little bit. You know, that's not a major divergence. It could definitely repair that, but looks
Carvana is exhibit A why investing is so goddamn hard. This stock was 300 something dollars and it went from 300 to 3 in about a year and a half. If you bought this thing at $3 in December, you wrote it up to 20, right? It got up to $20 or $19 in February. That's great. And then if you held it still, well, you watched it lose half its value again because they went from 19 to 6 or more than that. Went from 19 to 6, and then it stayed there, and now we're back at 24. So like, God, man, trading is sometimes trading is the way to go because investing is really hard.
yeah. So and I think it's important to keep in mind with this one that this was one of the most shorted stocks too, as it was
still is.
Yeah, still is, right. Great point. A lot of this move probably was caused by short covering. You know,
Maybe.
is that it? Who knows? It's still in a nasty downtrend, but definitely an impressive rebound. It's going to need some time before it ever sees the kind of momentum that it saw in 2020, 2021.
That's it. Time sometimes is the answer. All right, we're done here on Chart Request Live. We'll be back next time we're doing the show is on Tuesday. The show airs every Tuesday and Thursday at 1:00 Eastern time. I'm Spencer. He's Patrick. Any questions, comments, concerns, requests for our future shows, email us questions at stockmarketmedia.com. That's the inbox that I am monitoring. Just put Chart Request Live or a CRL or something in the subject so I know what you're talking about. That's a wrap. Pat, this is fun. Let's do it again.
I love doing this show because it forces me to look at some tickers that I probably wouldn't have otherwise looked at. So thank you guys for all the wonderful ideas and keep looking at them. Keep bringing those tickers here. I love this show because it's a chance to kind of just pull back the curtain and see how we look at these things. And yeah, thank you guys.
Thanks for the request. See you next time.